We know export selling, we know export marketing. In selling, our idea is just to export things inactively. We are not very actively looking at the the market. We are not doing the so-called marketing. So when we talk about the general marketing, we try to differentiate between sales and marketing. Similarly, you try to differentiate between export selling and export marketing. Export selling again is a very spontaneous kind of activity wherein you get some solicited or unsolicited orders from abroad, and you are very much ingrained yourself in the domestic market, and you try to satisfy those orders. So you are not very actively involved. And in marketing, of course, you have got a strong network, international network. For example, Tata Motors. Tata Motors is presently finding that the growth rate of their sales in the international market is probably more than the growth rate of their sales in India. Maybe it's a novelty factor that an Indian car, strong car, thick body, like something like Harley Davidson, something. So there can be a number of reasons which marketing people will tell why it is so. But the growth rate of Tata Motors in the international market is more than the Indian market. So they have a full-fledged marketing department in different countries, and they have very good network of distributors and like that. So when we talk of the selling and the marketing, it comes to the same thing. When we say export selling, we can simply say exporting, and when we say export marketing, we are talking of the international market. Okay, similar. Just to warm up, although that's not very necessary, I'm just giving you a warm up to tell you requirements for export marketing and understanding of the target market environment. You do like some kind of research, you have an idea, like for example in your case you are doing research, trying to find out what are the items which I can export to Germany or to countries, and what are the things which will get you an immediate entry, and what are the ways of entry, maybe trade fairs, maybe trade shows or things like that. Okay, so you are trying to understand the market, the use of market research, identification of market potential. That is what probably you are doing for entering into the export market. And decisions concerning product design, pricing, distribution, channels. So so-called 4 P's of marketing, or 5 P's or 6 P's of international marketing, or 10 C's of international marketing. So depending on whatever the approach you take, you are doing something to make it more controllable, or to ensure that the outcome comes. Because ultimately you are spending money in the international market. The only difference between domestic marketing and international marketing from the operational point of view is that the initial investment is high in the international market, right? In the domestic market, probably that kind of investment may not be there. You can always go to especially for the research purpose. So when you explore international markets, you really spend a lot of money probably without returns. So that is the requirement of the export marketing. Then organizational export activities. The firm is willing to export. It will not even fill an unsolicited export order. The firm fills. No, that's a different stages, right? From the fact that you are not actively involved with the export marketing to the firm fills the export orders but does not pursue unsolicited orders. Such a firm is an export seller, right? That is the second stage. The third stage is the firm explores the feasibility of exporting. This stage maybe a bypass, stage 2. And further on, the firm exports to one or more markets on a trial basis, like probably what you will be doing, or like you have already done in the exports, and now you will be doing imports. Probably you will do the reverse. So you will try out some people in the importation, especially when you are talking about the needles, and the kind of very different specifications which are probably not available in India. Probably you will get it from Japan or some countries who are having very high tech.
Yes, from Germany.
Yeah, Germany also, because that stainless steel strength, that composition, thickness and all. So you will try same thing. Because you are getting actively involved. So there are stages. Stages are there also in export business or import business, because the stakes are high, right? So the kind of money which you spend, you try it out with small money, then you try out with more money, like that, depending on the situation. Like for example, in your case, since your business is already there for last 20 years, and you have already have cash reserves in the organization because of the refurbished photocopier business. So obviously you can try. You can use that cash, and probably you can try for the future gain. May not be immediate gain. Again, all these are warm-up things which I am discussing. The firm is an experienced now. The firm is an experienced exporter to one or more markets, and after the initial success, the firm pursues country or region-focused marketing based on certain criteria. Okay. The firm evaluates global market potential before screening for the best target markets to include its marketing strategy. Now the stage is coming, global marketing. When you're talking of strategic plans, you're talking of the real marketing plan, street shows, those kind of things. So that stage takes time. Okay. These are not our main focus of our training program. I'm just telling you to make you understand that in the marketing efforts or sales efforts, we do all these things so that you can understand the requirement of the documentation and procedures, because all these things come from here. One more thing I want to share with you from my own experience. When I completed my MBA in international business, and initially I was involved with procurement and documentation, things like that, almost for 12 months, 1 year or so. I got the practical experience of dealing with customs and the CHAs or C&F agents, doing all that, that gave me a lot of confidence. From the second year onward, I was very much involved in the industrial marketing. So I was traveling to different countries. I was, doing a lot of trade shows of the type which you are probably will be doing now. So taking samples and things like that. Let me tell you, the knowledge of documentation and procedures is very, very useful in marketing. So sometimes I say that the 2-day training which we do in export-import documentation and procedures, it is also essential for marketing. The reason is very simple. When you deal with a foreign buyer, the 80% of the talk is on documentation, procedures and things like that. Or the contract, what should be the contract, what should be terms, Incoterms, what should be FOB, CIF, those kind of things. And very less of the other things, because those things normally in the international market is decided by the whole game. What is your price and what is the USP you are giving, which is already understood. You already know that this party will give you the order for this reason, right? They will not give you the order on the face value. Right? So 80% of the marketing is this only, the documentation. They want to ensure that you understand the LC, there are no mistakes, there are no delays, those kind of things. So that's why I say that this kind of training is very useful for, even though for the people who are not involved with the documentation and process, right? So that's why I'm giving this one. Now there is something I want to show you, that if you look at the trends in the international market, this graph, I'll just explain to you what is this graph. This is the first graph, you can see in figure 3, is the fluctuation of price of the textiles and apparels imports of US over the year, starting from 1989 to 2013. You can see. Can you see that the unit price is coming down of the textile products? Prices are coming down. What is the meaning of this? That slowly and steadily, not only in textiles, almost in all other items, instead of the price, instead of going up, they are actually going down because of competition. Right? Chinese competition, Vietnam competition, Cambodia competition. You can see here, the prices had peaked, for example, in 1996 to almost 2.41. What is the meaning of this? The whole textile and apparel thing, they have made an equivalent unit. they've just made an equivalent unit per square meter kind of thing. So per unit price, they peaked at 2.41 and it came down to as low as 1.6 and now it is hovering around at 1.85 in the year 2013, right? But what has happened? The total volume of import has increased. Obviously, when price goes down, the consumption increases, the volume increases, and what has happened? You can see here that the share of, in the second table, you can see the share of different countries in that particular imports of US textile and apparels. China's share is 40%, right? And change over the last year, the change of this share is plus 3%. So, which means the Chinese share has increased by 3%. Similarly, if you see the second highest, which is Vietnam, their share is 8%, and in last 1 year, the share of Vietnam has increased by 15%. Very high, right? Similarly, in India is the third largest supplier of textiles and apparels to US. Their share is approximately 6%, and the change over last year is 7%. And Indonesia 5%, change is 1%, and Bangladesh. The change is although their share is very less, 5%, but the change is 10%. So what I'm trying to tell you, that internationally prices are going down, volumes are increasing, and competition is increasing. Even for China, there is a competition with Vietnam, such a high competition. You can see here, right? So this competition is based on, again, pricing and ability to deal with them in terms of, because US imports are very high. So how you are able to deal with through procedure, documentation, what kind of services you can give. Only price does not matter. There are other things. The government policy also matters. The Chinese government policy, Vietnamese government policy, Indian government policies, all these things. So all this so-called procedure documentation is governed by the market forces, the prices which are happening in the international market, also with the competition which is happening among the countries, and the government policies. So whatever we'll be talking today and tomorrow, it is all governed by all these things, and there is a fourth factor also, and that is WTO, World Trade Organization. You will soon understand that whatever the documentation parts we are talking about, the process we are talking about, there is a very strong element of the influence of World Trade Organization. Okay, so probably some of you will not know what is WTO. I mean, some of you will know it works, but I'll try to give you an idea that what is the influence of WTO in all these processes. So we'll be taking it in such a way. Okay, now, so government policies, right? Government has some policies which makes it possible for Vietnam to do a better job than probably China, or Bangladesh to do a better job probably than India, just being even a small country. Depends on the government policies like tax incentives, subsidies, governmental assistance. So each government will try to make some policies to encourage exports and to probably not stop, but to regulate or maybe to control imports. But in today's time, you really cannot control imports because that is very important for the growth of the country. But there is one factor here. Government can do anything, but they have to comply with the WTO norms. Because the WTO does not allow this subsidies. There should not be any element of subsidy. What is the meaning of this? If there is an element of subsidy, then the things which you are exporting, basically what you are doing, you are not exporting, you are dumping. That's why governments have in the import procedures, you have something called anti-dumping duty. The idea of anti-dumping duty is that some of the governments have such policies that they increase the subsidies directly or indirectly. Maybe in the form of tax incentives, but tax incentives is what? Tax incentive is what? Like when I import something, when I export something, when I consume something in India, directly or indirectly I am giving a lot of taxes to the government. Like for example, I am exporting shirt. So what I do when I export shirt, I buy fabric, grey fabric, I bleach it, I dye it, I do some processing on this, then I do CMT, cutting, making tailoring, then I use buttons, I use thread, I use the so-called bukram kind of thing, and many other accessories. Okay, so when I do that, there must be some import duty on the cloth which I have given to the government. There must be some import duties on the dyes which I have used to color it, or the bleach which I have used it, or the buttons which have come from China. I must have paid some duty, which is very, very difficult for me to calculate what is the duty. It's not possible. So what the Indian government will say, we know that you are making a shirt and you are exporting. We have taken something from you in terms of import duties, in terms of some sale tax, something is there. And roughly, if you are selling for 100 rupees your shirt, probably as per their calculation, directly or indirectly, government has taken some 20 rupees from you. So government will say that my policy is that I want to return this 20 rupees to you because you are exporter. I don't want that there should be any taxing directly or indirectly from my side. So I want to give it to you. Okay. WTO says okay, you are right. Because you have taken something, you are giving it back. But if the government says that we had actually not taken 20 rupees, we have taken 50 rupees and we want to give back, then WTO will say, what are you talking? It's not possible that you have taken out of a 100 rupees shirt, you have taken 50 rupees and you cannot really justify it. Show me all the import duties and all those things. And the calculation will say that you are not talking sense. It means 30 rupees is subsidy. 20 rupees was the actual price which the government has actually taken directly or indirectly. That is okay. That is justified. But the government says that I will give you 50 rupees. Somebody will say, why the government will give 50 rupees from the pocket? Government may give. Like for example, it was always alleged that in Chinese goods which were being sold all over the world, there is some certain kind of subsidy being given by Chinese government. There was always an allegation. How much they are true, I really don't know. Where from the government will bring that money to give, I really don't know. But it is always in the world, it is always said that China has been built on government subsidies. But I really doubt whether Indian government can give. Because do you really think that the government have that kind of money to give? Government will, actually what they will do, if they want to give 20 rupees, they will rather give 15 rupees, 5 rupees, still they will not give. Because their current account deficit and fiscal deficit, we are facing so many problems. But it is always the allegations made by, like for example, in the shrimp industry, India is a very big exporter of shrimps, right? And it is always the allegation of US that Indian government is giving subsidy. And they are always anti-dumping talks and this and that. And they have made it a mess, shrimp industry from India, right? But logically speaking, the simple logic defies that Indian government can actually give subsidy on shrimps. It's not possible. Indian government is not so rich that they can give subsidy. What maximum they can do, that whatever has been taken, they are just giving back. So government policies hovers around these things. Tax incentives, subsidies, government assistance. And tax incentive also means this thing. Like suppose you give land at a very reasonable price to a factory in a special economic zone or free trade zone, right? That's okay. You're not taxing and you are giving a 6-year, 7-year tax holiday, or in a special economic zone, you will say that we don't will charge anything, and even the electricity, there is no surcharge or, things like that. We'll provide you everything with the basic price. We'll not charge anything. Fine, this is okay. There is also tax incentives. And another thing, if you are involved with export-import business, WTO will not mind that the people who are involved in export-import business, the government says will not levy any income tax. WTO will not say anything, even there. Why? Because, see, whole world is competing, like I showed you in that chart. US import is very high for textiles and apparels. And so many countries are trying to sell their items. So government will be very, very keen that we are doing better than China, we are doing better than Bangladesh, or Bangladesh is doing better than India. So the only thing what government can do, that they can just do away with any direct or indirect taxes, including the income tax, or even the employees, right? So WTO will not matter. But WTO will come into picture when there is a solid evidence that beyond what was due of the government is going beyond that. So that becomes subsidy. So that part is clear. You will see that when we talk of the export-import documentation procedures, you should look at from that point of view that there is a constraint, and WTO is a constraint. WTO will not allow everything. So WTO keep a watch. And what is WTO? WTO is nothing but a club of more than 180 countries, and they have agreed on this system. It's not that they are putting some kind of big brother role or something like that. It's just like a club of countries, and they have agreed on certain things for the benefit of everybody. And one of the major thing is no subsidy. No government should give any subsidy. They can only give back things which they have actually taken. So all these procedures, documentation, it is all monitored by World Trade Organization. And more or less you will find these procedures and documentation will be very similar in all WTO member countries. There will be very little difference, especially for the commercial documents. Documents are of different types. Like when there are certain documents which goes with the shipment, like your packing list, your invoice, certificate of origin, insurance policy. These are the documents which are the main commercial document, main, right? And you will find that even the design of these documents would be similar. It is called ADS, Aligned Document System, which is adopted by all the countries. So the size, the format will be same. So that, why? Because any invoice coming from US to India, or any invoice going from India to some other country, they should look similar. It is easy to comprehend, right? So this ADS system is adopted by all WTO members to make things easier for everybody. Okay. So commercial documents, right? We will be talking about those things, commercial documents. Then there are inland documents within the country. They are documents which do not go with the shipment. They are mostly called regulatory documents. And within commercial document, you have got principal documents and auxiliary documents. Principal documents again move internationally, and auxiliary documents are the documents required to obtain principal documents. So basically what we are doing, first we have categorized the documents in two parts. One is the commercial document and regulatory document. Regulatory documents are for the consumption of India, within India. Like for example, dealing with customs, for example, dealing with incentives authorities, for example, dealing with the banks, internal documents which do not move out of the country. These are all regulatory documents, right? Or dealing with the excise department, removal of goods for excise, regulatory documents. And all the documents which are part of LC, letter of credit, which letter of credit asks that these documents should be there, right? They are all commercial documents, right? To get these commercial documents, there are some certain documents which are called auxiliary documents. Like for example, to get certificate of origin, I make a document called export, origin declaration, or the declaration for certificate of origin, which I give it to Chamber of Commerce, that my goods are value added, mainly made in India. I give an affidavit. So that becomes your auxiliary document. And your certificate of origin is also a commercial document. My document which I have given declaration is also a commercial document. But the certificate of origin, because it's part of LC, is a principal document of this commercial document. And the document which I given to Chamber of Commerce, from my side, it becomes an auxiliary document. So these kind of categories. So what I'm trying to give you the example, that all these things are aligned and comes from the WTO membership, that club. And WTO makes it easy to do business. Okay. So this part is okay. Is it okay that this kind of initial thing will be okay? I think it will give you a foundation. for understanding things. It's always to understand the background. It is always good to understand the foundation, so that when we move forward, your clarity will be more. Okay. So few more slides. Government actions to discourage import. Normally it is not discourage. Normally it is just to manage, right? Or to regulate in such a way that so that it helps. It helps you to export, because you cannot really export anything without any import content. You really need to import something to be able to export. Or for the growth of the country, you need to import. If the Indian government says that will ban petroleum imports, country will be stopped. The economy will stop, right? So, government actions to discourage imports or to regulate. Actually, the word is not correct. We use the word discourage imports and block market access sometimes in some of the items. What the government does normally, most of the governments, they have tariff and non-tariff barriers. They have tariff and non-tariff barrier. What is the meaning of tariff barrier and what is the meaning of non-tariff barrier? Tariff barriers are monetary barriers, money, duties, right? And non-tariff means non-monetary. Like for example, Indian government will say that any goods coming to India should be passed by our Food and Drug Administration. You should have a certificate. Now there is no monetary part. It is just a requirement that if you really want to sell anything in India, which is either food, chocolates for example, or cookies, which comes on Diwali, you have seen so many imported items coming. So if you want to really sell it, you should have a certificate from FDA or from Indian Statistical Standard Institute or some authority, whatever the authority has. So that is a non-tariff barrier. And many of the countries do that. US, US is the biggest user of non-tariff barriers. Anything you supply to US, there will be some regulations, some regulatory authority, you get this certificate, that certificate, right? That is a non-tariff barriers. And then import controls. Import control basically means some countries use quota system. Right? Quota system means, although quota system is now very less used because WTO does not like it. You are making quota. Like for example, Indian government says that Indian government comes out with a quota that imported cars only 1 lakh car can come, passenger cars. Now all the Skoda and Audi and these people will say, so how much we will get? So they will say, you bid. We have a quota of 1 lakh car per year. There cannot be more than 1 lakh car which can come to India, for example, right? So it is possible, but WTO definitely will not like it because it is against the principles of WTO. You are blocking the market access to the automotive companies of Europe, Audi, Skoda, or whatever it is, right? But it is possible, and you must be knowing earlier there was a quota for export of textiles, ready-made garments. Ready-made garments quota was there till 2004 under multi-fiber agreement, MFA, multi-fiber agreement, especially to Europe, USA, and also Japan. But in 2004, that quota is now gone. So India had a quota, China had a quota, so there was a quota system. So some countries still do in certain items, they do. But WTO, you can always go to WTO and you can file the complaint. So import controls, but import control may not be only in the form of quotas, it can be in other forms also. Then non-tariff barriers like quotas, discriminatory procurement policies, restrictive custom procedures, arbitrary monetary policies, restrictive regulations. Now what is again it's a non-tariff. There is now a complaint last 2 months back only. There is a complaint against India by US in World Trade Organization regarding solar cells and solar equipments. Indian government has come out with a national solar mission policy which is worth 40,000 crores. right? As per that policy, there is a preference for such suppliers of solar cells and solar equipments which have at least 40% Indian contents. Okay, what is the meaning of this? That if any US company want to use this 40,000 crore rupees opportunity in India, first they have to set up a company in India with a local party, right? And manufacture in India. Only then you can have 40%. So they just cannot sell just like that, They cannot sell it. So USA has complained about India in WTO, and this case is going on for last about. It actually started in February 2013. So last month, WTO, it has gone to the full panel, full dispute settlement panel. So there is a different stages. So it has gone to the second stage. Now dispute has become a mature dispute at WTO. So it is already in the process. So countries do that. They are all non-tariff barriers, which I told you. Okay. So all this procedure documentation, what we are talking, comes from these kind of basic understanding. Now tariff system, all of the countries have different system, little bit different. Like for example, in USA it is a 2-column tariff system. There are two import duties in USA are 2-column. 2-column is 1 column for the preferred countries and 1 column for the non-preferred countries. Right? So the duties structure for the preferred countries is very, very low. If the goods are coming from certain countries, column 1. If the goods are coming from other countries, column 2. But India has a single column. India do not differentiate between preferred country or non-preferred country, except for the MFN, most favored nation status. That's a different thing. That is allowed by WTO. In fact, double entry system, the double column system is against the WTO principles. But USA says we will not change it. In fact, WTO has time and again, had their reservation about this system. How can you differentiate one country from another country? That if the goods are coming from the column A countries, this is the import duty. If the goods are coming from column B countries, these are the. Or there is another system which is allowed for all the countries, that is called GSP. We will be talking about it when we talk about the certificate of origin. Generalized system of preferences. No, that is GSP. What? Double column? No, GSP is for everybody in the world. I'll tell you a little bit about GSP because it's very important. We'll be again talking a little more about it. GSP means generalized system of preferences. It is actually developed by UNCTAD, United Nations Council for Trade and Development, right? UNCTAD. It's an international organization. The idea is to help developing countries produce more, and WTO has no problem because UNCTAD is an international organization sponsored by United Nations, and it's a Bretton Woods organization like WTO. So WTO will not have any problem with GSP. In GSP, what happens? What they have done in the world, they have categorized the countries in 3 categories: A category, B category, and C category. A category means very rich countries like US, Europe, Japan, triad countries. In B category, they are developing countries or emerging economies like BRICS, Brazil, Russia, India, China, who have developed, and they may become developed countries soon. So B category. Then there is a C category of the very poor countries. C category. Like Somalia, many of the African countries, which are least developed countries. So under GSP, like I told you, the 2-column system in USA. They have got a 2-column system. Column 1, column 2. Column 1 means duty will be less. Column 2 means duty will be more. It means they are categorizing countries on the basis of their relation. But in GSP, it is not relation. In GSP, it is the level of development. So what is the meaning of this? You have got 3 categories of countries A, B and C. So A is rich, B is developing and C is LDC, least developed. So any goods coming from C to B or C to A, any goods coming from B to A or B to C, logically a rich person should not charge high duty from a poor country. Then logically, if you want to help a poor country. So under GSP, what happens? If the goods are coming, for example, from Bangladesh or from a country which is in C category to, for example, USA, so duty should be less, right? If the goods are coming from India to, for example, USA, from B to A, the discount on duty will be half, for example. For example, discount from Bangladesh is 100% on the import duty, and discount for the Indian goods coming to USA, it is 50%. And suppose goods are coming from Germany to USA, A to A, there is no discount. You got it? So GSP is very, very important in the whole export-import procedures. It matters a lot whether the goods are coming from A category to A category or B to A or A to B or C to A. That consideration is very important if you really want to get a order. Because for the buyer, if the goods are coming from C category countries, the import duty will be less. So his final price will be low. He'll be very happy. Suppose you are importing needles. Suppose. And India was a country. And if you are getting same price from B country and C country, suppose. So why will you buy from B country? You will buy from C country. Because to you, import duty will be half or maybe 100% zero. So that formula is already there. It's a transparent formula for GSP, depending on the category. So that's why certificate of origin of two types. One is the ordinary certificate of origin and second is the GSP certificate of origin. The certificate of origins are of two types. One is the ordinary certificate of origin COO and second is GSP. So if it is a GSP case, you have to prove that this good has actually been manufactured in C country. So the only proof is certificate of origin, right? So if the certificate of origin is of the C country under GSP, and if it is GSP certificate of origin, importer will be very happy and he'll make sure that in the LC he writes that I need these documents, and one of the most important document is GSP certificate of India or whichever is the country, if he is getting some benefit. Otherwise he lose money, right? And this is a direct thing, and indirectly that country is benefiting by this system. So WTO has no problem in this GSP. It is endorsed by WTO, this system. WTO has absolutely no objections to this, but WTO has an objection to two-column system of USA, which is based on their own whims and fancies, right?
So both these systems contradict each other.
Yeah, definitely. Two-column system is a contradictory system. Only US can afford, because US is a very big country, so they can.
The US is following this directive or what?
As per my knowledge, it is only in US. Other countries will not be able to do, because they will have very bad face when they meet in WTO. So for everything, people will say, we don't want to hear you. You don't understand. You have a two-column system. But USA is a hard skin. You know, like USA has its own thing. He said, I have to take care of the world. I have to spend so much of money. You know, I don't want to hear all this thing. You know, like, so USA gets away from all these accusations of different countries in one form or the other, right? In fact, there are very interesting case studies in WTO, especially a small country like Antigua and Barbuda fighting with the USA. The population of Antigua and Barbuda is only 3 lakh people, and they had a very strong dispute with USA, and they filed the case and they won the case. Antigua and Barbuda, in WTO they won the case. So WTO asked USA to mend their ways in that particular thing. USA says, forget. He's like an ant, I am the elephant. And Babuda and Antigua and Barbuda, what they did, say that what is the use of your WTO? You have given this sanction and USA is not listening. So next time what happens? Then WTO says that Antigua and Barbuda, 3 lakh people only, and it actually hampered their thing. Say you find out some solution. So Antigua and Barbuda goes to WTO. Sir, we have one solution. An ant can create a lot of problem for the elephant. How? So WTO says, tell the solution. So they say, allow us legal piracy. What is the meaning of this? See, the Antigua and Barbuda says to WTO, please allow us to pirate all the Hollywood movies and distribute to all the world. How will you do it? Sir, internet is there. There is no problem. We'll download all the Hollywood movies, convert it into thousands and lakhs of CDs, sell to the world, and this is the only way an ant can create problem in the nose of the elephant. And you will be surprised, WTO actually did it. It legalized officially. It legalized, and there is a case study is given there on the WTO website. They actually legalized the piracy of Hollywood movies by Antigua and Barbuda. And then only USA understood, yes, it can actually create problem. Then USA agreed, okay, don't do piracy, I'll correct it, whatever I'm doing. So this is how the world moves. So all these documentation procedures, they are all monitored by WTO. And WTO definitely has their own ways of doing things. If a country is not understanding, they will go next level, second level, third level. Like for example, I told you, such a small country could create problem for USA and get the thing done. So in fact, India also had a very big problem with Bangladesh. So that another case study is there. So you can actually go to the website of WTO, and if you read about this thing, you will get a very good understanding of the role of WTO. Okay. So we will not get into those kind of case studies. There's very long case studies. So this tariff systems are there. Okay. Then preferential tariff, reduced tariff rates apply to imports from certain countries, which I just told you, GSP system. GATT, WTO prohibits the use with 3 exceptions. Like I told you, 2-column system, and certain countries have preference. Like for example, in European countries they got a European Union. So European Union, within European Union there is no import duties. It's a free trade. So India has free trade agreement, for example, trying to have a free trade agreement in SAARC countries. India already has a free trade agreement with Thailand. USA already has a free trade agreement with NAFTA countries, Mexico and Canada, right? So reduced tariff means that which means the country have their own bilateral understanding. GSP is not bilateral. GSP is multilateral. You understood? That is authenticated by WTO. There is a formula. But here we are talking of the bilateral agreement. 2 countries or 3 countries within them. That I will not charge any duty to you, you don't charge any duty. That is a bilateral. So WTO doesn't like that. But 3 exceptions. One is the historical preference arrangements already existing. Preference is part of formal economic integration in the treaty, which means free trade agreement. I'll tell you the reason for that. Then industrial countries are permitted to grant preferential market access to LDCs. But let me tell you, this third one, basically third one is that GSP only actually. Third one is GSP. A rich A country giving preference to B country or C country, that only. But the first 2, I just want to tell you. Second one is that free trade agreement. WTO says, no problem. If you want to have free trade agreement, WTO doesn't mind, because what WTO feels, more and more countries will have free trade agreement. Like for example, India, Pakistan have a free trade agreement, suppose, or Bangladesh, India has, or SAARC countries has free trade agreement, like European Union, or like NAFTA countries, NAFTA agreement, So WTO feels, if more and more countries have this kind of formal agreement, transparent agreement, the world will become barrier free, slowly and steadily. So WTO says no problem. You can do that. But it should be a proper formal agreement. That is the point number 2. Point number 3 is the GSP. And point number 1 is that certain countries have some historical relations and they already have a very, very old agreement. Like for example, India-Nepal. Now India-Nepal relationship is not recent. It is since the independence. So will WTO say that you cannot have, like we have got a preferential treatment with Nepal, any goods going to Nepal or any goods coming from Nepal to India? Although there is no formal agreement, there is no free trade agreement, no. But what we do, we have a different tariff structure for Nepal. Somebody can complain to WTO. There is no formal agreement. But WTO will say under the exception number 1, there is a historical relationship between Nepal and India because Nepal is dependent on India for its security, defense. So they have agreed formally or informally to have something. That is okay. You got it? So this professional tariff is possible with these 3. One historical, second is the formal agreement, free trade agreement, and third is the GSP, that is multilateral. Okay. Anything which is other than that, somebody can complain. Okay. Customs duties, again I told you, see, all these duties comes from these problems only, which you are talking about. The problem of WTO, problem of countries competing with each other, like I told you, anti-dumping duty. So it is possible, and we had been telling all the time, I don't know the logic behind it, but we had been always telling that the toys coming from China, they were priced cheaper than the material. Like a toy is 100 rupees and the manufacturer in India says, how it is possible 100 rupees? The material which is used in this 100 rupees toy actually is 110 rupees as per my calculation. Right? But this claim cannot be contested. So it is very clear as per the Indian people that this 100 rupees toy has having some subsidy from the Chinese government. Right? So Indian government, what they did? Many times Indian government applied anti-dumping duty on toys coming from China. So you have got different types of duty. First is the something called ad valorem duty. The basic duty, the very first duty is ad valorem and specific. Do you know the difference between ad valorem and specific? Okay. See, when anything is coming to our country, there are two ways of looking at it. I can have import duty on the value. I can have duty on the value, or I can have duty on the tonnage. I can apply duty in two ways. One is based on value, one is based on tonnage. Can you tell me logically that what kind of item I should have duty on value terms, price terms, and in which situation I should have, any country should have duty on tonnage? Just tell me, think about it. See, there are two ways of looking at the basic duty, the first duty, the basic duty. One is the price of that good, and second is the tonnage. In which case I will apply value base or price base duties. Price base means suppose this price is 100 rupees, so my duty is 25 rupees, 25%. Right? There is one way of looking. Second way of looking at it is that for 1 ton of this material, this will be the duty. That can be another way, right? So just logically think that in which case I will have a duty based on price, and in which case I will have duty based on tonnage. Just tell me. Think about it.
Spare parts, I think it's based on value, and in raw material.
In raw material, why? Maybe you are right, but why?
For crude oil,
Okay, why in crude oil should I have duty on price or on tonnage? Why? Think about it. Let me explain to you. Suppose somebody is importing scrap in India. Scrap can be of iron, it can be brass, it can be aluminum, right? Now, everybody knows that the scrap is nothing but you put in the furnace and it is actually scrap means that weight only, na? If it is brass, brass is brass. And everybody knows that brass is 250 rupees kg in the international market. Today price is 50 rupees. But the person will say, my brass is 25 rupees. Customer will say, what are you talking? The international price is 250 rupees. He will say, sir, it is a scrap, sir. This person was very much worried. All this scrap is lying there. He gave me free of cost. 25 rupees is my lifting charges. He says, scrap. Custom cannot contest this. Can custom contest this? In spite of the knowing the fact that the price of brass is 250 rupees per kg. But this guy is also right. He says, I got this, sir, even if it is brass, sir, it is scrap. I got it free. He can contest. Now custom will be in soup. Now they are losing duty. Isn't it? So what custom will do? Nothing doing. I will go on the price. Sorry. I'll go on the quantity. My duty is based on 1 ton of this. Is it a brass scrap or is it a iron scrap? My duty is, I don't know whether you got it free or whatever it is. My price, and that price varies. Per ton. As the international price varies. Right? So that becomes your specific duty. Specific means that you have, it is based on quantity, tonnage, right? And ad valorem duty means it is based on value. Now what is the minimum value? Now let's come to the value part. Somebody is importing chocolates from Malaysia and somebody is importing chocolate from Switzerland. The price of a box of chocolate from Malaysia is 250 rupees. Same chocolate, specification is same, ingredients are same. And somebody is importing the same chocolate from Switzerland for 1000 rupees because it's a Swiss chocolate. Everything is same. The milk quantity is same, the boxes looks like same, both are looking good, everything is same. The difference is brand. One is a Swiss brand, second is the Malaysian brand. Okay? Now, suppose customs, India says that we have a price on chocolate which is based on per unit price, like 1 kg of chocolate, in whatever form it may be. Whether it is in bar form or whether in the box form, we don't know. Now, don't you think that the customer will be losing money?
Yes.
Right? Because the same chocolate from Malaysia will cost 250 rupees. The same chocolate from Switzerland will cost 1000 rupees. So what customer will like to do? It will go for value. And now there is another possibility. Now this importer will do a smart mess. What he will do? He will bring 2 consignments, one from Malaysia and one from Switzerland. He will say, sir, 1 kg of chocolate is coming from Malaysia, it is 250 rupees. And another kg is coming from Switzerland, it is also 250 rupees. Or maybe less or maybe slightly more. Right? You can always say. Very logical. If I am getting from Malaysia, I can also get it from Switzerland. But customer will say, no, you are cheating me. Why you are cheating me? Because custom is having cooperation with all over the world. All the customs are interconnected through their own intranet. And they know the price of every brand. They know the real-time price of every brand. They say, what are you talking? In Malaysia, what brand you are talking is 250 rupees, yes. But the brand which you are getting from Switzerland, we know its actual price is 1,000 rupees. So you will be put under the FEMA Act, Foreign Exchange Management Act. You are cheating Indian government, right? So they will say this price is 1,000 rupees. Either you pay this duty or we'll put this case to enforcement ED, right, under FEMA, and give penalty also by giving false information. So what the people will do? They already know that for chocolates the duty is ad valorem, and if I am getting it from Malaysia, my price will be 250 rupees, and even if it is 1,000 rupees, okay, I can manage 900 rupees. Okay, so I'll keep it 900 rupees, but I cannot keep it 250 rupees. I'll be caught. Now, in such cases, if there is a specific duty, 2 minutes. If there is a specific duty, suppose, don't you think the Indian government will be losing money, right? So there is one type of duty is, the very first duty is either ad valorem or specific, not only in India, all over the world, right? So certain items duties are ad valorem, certain item is specific. For the simple reason, the nature of the item. So this part is clear, right? Again, very basic things I am discussing, nothing, not going in. Then compound and mixed duties. They are the other kind of duties which I told you, anti-dumping and special additional duty for the purpose of excise, balancing excise, local problems. Every country have their local problems, some excise duties, some sale tax. So you have to match. Otherwise what will happen? The imported goods will be cheaper and the domestic goods will be higher, so that industry will die down to balance out, right? You got it? So basically import tariffs are based on this background. Is it clear? So should